Financial advisors help people manage their money and reach their financial goals. They can provide a range of financial planning services, from investment management to budgeting guidance to estate planning. Picking the right financial advisor for your situation is key. Doing so means you won't end up paying for services you don't need, or working with an advisor who isn't a good fit for your financial goals. Welcome back to another episode of Living Fire. If you never want to miss an upload, make sure to subscribe to the channel. Some financial advisors have a fiduciary duty to their clients, meaning they are obligated to act in their client's best interest rather than their own. Always work with a licensed, registered fiduciary, preferably one who is fee-only, which means the advisor is paid directly by you, and not through commissions or selling certain investment or insurance products. Certified financial planners have a fiduciary duty to their clients as part of their certification. No matter what title, designation, certification, or license an advisor claims to have, it's on you to vet the advisor's credentials and experience. Always research an advisor's background by looking up the firm's Form ADV before you agree to work with them. Number 3, learn about financial advisor options. Financial advisors aren't just available at your neighborhood advisory office or bank. There are lots of ways to get financial advice. The option that's right for you will likely depend on your personal preferences, the services you need, and your budget. Robo-advisors. A robo-advisor is a digital service offering simplified, low-cost investment management. You answer questions online, then computer algorithms build an investment portfolio according to your goals and risk tolerance. Low cost. Fees start as low as 0.25% of your balance, and many services have no or low account minimums, so you can start investing with a small amount of money. Good when you need help investing for financial goals like retirement, but don't want or can't afford a complete financial plan. Look elsewhere if you need more rigorous financial planning. Though some robo-advisors offer higher-tier financial planning services, most excel at simple investment management, online financial planning services, and advisors. This is the next step up from a robo-advisor, an online financial planning service that offers virtual access to human financial advisors. A basic online service might offer the same automated investment management you get from a robo-advisor, plus the ability to consult with a team of financial advisors when you have questions. More comprehensive services such as Facet Wealth and Personal Capital roughly mirror traditional financial planners. You'll be matched with a dedicated human financial advisor who will manage your investments and work with you to create a holistic financial plan. Many online financial advisors can match you with an advisor with a top-tier credential, such as a certified financial planner. Medium cost. Online financial planning services will typically cost less than a traditional financial advisor, but more than a robo-advisor. Some services have relatively high investment requirements of $25,000 or more. Others require no minimum investment. Good when you're comfortable meeting with an advisor online, but would still like holistic financial planning services, such as estate planning, retirement planning, or help with company stock options. Online advisor marketplaces, such as Harness Wealth and 𝐥𝐤 Financial, and many online advisors themselves do the work of vetting a financial advisor for you. Look elsewhere if you'd prefer to work with an advisor in person. Traditional financial advisors. Traditional financial advisors can meet with you in person and will be able to help you with all of your financial planning needs. High cost. This is often the highest cost option. Many traditional advisors charge around 1% of your assets under management. Some advisors also require a high minimum balance, such as $250,000 in assets. Good when you want specialized services. Your situation is complex. You want to meet your financial advisor in person and develop a long-term relationship with them. Look elsewhere if you want similar services for less, are comfortable getting help online, or don't want to vet a potential advisor yourself. Number 4, consider how much you can afford to pay an advisor. Financial advisors have a reputation for being costly, but there is an option for every budget. It's important to understand how much a financial advisor costs before you commit to services. Generally speaking, there are 3 cost levels you're likely to encounter. Robo-advisors often charge an annual fee, one that is a percentage of your account balance with the service. Robo-advisor fees frequently start at 0.25% of the assets they manage for you, with many top providers charging 0.50% or less. On a $50,000 account balance, a 0.25% works out to $125 a year. Online financial planning services and advisors typically charge either a flat subscription fee, a percentage of your assets, or both. For example, Personal Capital charges 0.49% to 0.89% of assets under management per year. Facet Wealth charges an annual fee that starts at $1,800 a year and goes up based on the complexity of your financial situation. Both fees include portfolio management and financial planning. Traditional financial advisors also often charge a percentage of the amount managed, with a median fee of 1%, although it can range higher for small accounts and lower for large ones. Others may charge a flat fee, an hourly rate, or a retainer. How much you should spend on a financial advisor depends on your budget, assets, and the level of financial guidance you need. If you have a small portfolio, an in-person advisor might be overkill. You will save money and get the guidance you need from a robo-advisor. If you have a complicated financial situation, a robo-advisor may not provide what you need. Number 5, vet the financial advisor's background. If you elect to work with a traditional financial advisor, you'll need to vet them, verify any credentials they claim to have, and check to see if they've had any disciplinary problems, such as fraud. It's not a bad idea to do this as well if you work with an online financial advisor, but most will do the vetting for you. When should you talk to a financial advisor? You can seek out financial help at any time, but it's especially important to get financial guidance after significant life changes. Whether you're buying a house, starting a job, getting married, or having a child, these life events can have major financial implications, and some upfront financial planning can go a long way toward building a stable financial future. It's also wise to speak with a professional if your financial situation itself has changed. Maybe your salary has increased, or you inherited some money from a relative. When money starts flowing in, it's a good idea to give it a positive direction. Otherwise, it can be all too easy to spend unnecessarily. And with that, we've reached the end of this episode, all about how to pick a financial advisor or investment manager. Do you have a financial advisor? Get involved and let us know in the comments section down below. If you enjoyed this one and found it helpful, remember to leave a like on the video and to subscribe to Living Fire for even more amazing videos just like this one. Thank you for watching, and we'll see you in the next one.